line in the sand. The key here is going to be, we believe demand outstripping supply by about 15% for Apple. Cook, of course, on the call, will talk about supply chain. That could ultimately be cautionary in terms of the guidance. But ultimately, like I talk about, I believe this continues to be a bedrock name and ultimately will lead tech higher.
The big technology founder, Alex Kantrowitz, is with us as well. He's a CNBC contributor. And again, take a look at Apple shares ahead of the report because they did have a very strong day. We were talking days ago that this stock had to hold 150. Well, now it's above 160. Alex, are you optimistic going in?
Into this earnings report, I wouldn't be surprised if Apple comes through right here, but I do see softness moving forward. You're going through a moment where you had so many people upgrading their devices while they were at home during the pandemic, getting money from government. Now the money's gone away. They're hanging on to their devices. They're very expensive to upgrade. Maybe Apple squeaks it.
I'm going to interrupt you right here because the numbers are out. Forgive me, Alex. Steve Kovac, what do we see here?
It's an EPS beat for Apple, $1.52 versus $1.43 per share estimated. On revenue, another beat, $97.28 billion versus $93.89 billion estimated. iPhone revenue, another beat, $50.57 billion versus $47.88 billion. And on services revenue, there's a little bit of slowing growth here, Scott, $19.82 billion versus $19.72 billion estimate, up 17% compared to more than 26% of the growth we saw a year ago. Dividend increase of 5% or just a penny to 23 cents per share. And the buyback program, Scott, it increased by $90 billion. I'll have more for you soon, but right now, back to you.
All right, Steve Kovac with the latest there. You want to give me a quick read? I'll get back to you in a second, AK. But the services business, the fact that it's slowing, and maybe that's not a big surprise because that was the whisper going in.
This was a Mike Trout-like quarter. I mean, they crushed it on an iPhone relative to a supply chain.
For those who don't know Mike Trout, he's considered one of the best players in baseball.
Yeah, so I'll call it.
We're all playing on the same.
So I'll call it a Mike Trout, a Tom Brady-like quarter. In terms of from an iPhone perspective, you look at services better than Whisper, combined with what we saw in the supply chain. I mean, this is one in Cupertino. They print this press release off, frame it, put it in Cook's office.
Still got to get some better ideas, though, don't we, on what the greater China business is. The revenue there was $18.34 billion.
Much better than feared. The story that you're seeing here with Apple is, despite all the haters continuing to hate, Cupertino continues to put up numbers that are just jaw-dropping. This is one, importantly, when we leave here, the most important thing for tech tomorrow, it's this Apple number, and ultimately much better than anyone would have expected.
I don't know if he was referring to you as a hater, Alex, but it certainly seemed like you maybe thought there was going to be a disappointment somewhere, and it was anything but, at least on the surface.
Oh, look, I got to agree with Dan on this one. I give it to him. Tom Brady quarter. You got to credit Apple, right? They came through, basically hit every number they were expected to or exceeded. There's been softness with so many of the companies. We just talked about Amazon posting a loss. Roku telling us that folks aren't buying because they're not getting the stimulus check. Robinhood saying people aren't trading as much as they used to. But Apple comes through. And it needed to in order to keep this big tech sector going strong. So I stick to what I said, which is that it could see weakness moving forward. But if you look at this quarter where there were challenges for it, the company came through. I agree with Dan. You got to give it up to Apple. Nicely done, folks.
And again, I mean, the stock was up about 4%, even maybe more than that in the session today. And normally, Shannon, it has run a lot into the number, so maybe you don't see the follow-through. This case is different, right? Some of these generals, as some have referred to them, have gotten hit pretty good of late. And this has come back nicely. What's your reaction to the earnings?
Well, I think it's great. I mean, we're expecting those services comps to slow a little bit, Scott, so that's not surprising. I do think you talked about China in terms of the demand side. I'm much more obviously concerned about the supply side with the shutdowns. But I think if you look in the second half of the year, I'm not expecting significant upside from this stock, but I think that what this earnings report did is it stopped the bleeding in terms of these big misses in big tech. And I think that this is a nice base for us going into the market tomorrow. We actually could extend this rally based solely on this earnings report. We haven't seen the worst of it quite yet, I think, in terms of some of these big cap tech, but I think we're certainly seeing the divergence, and I'm happy to see it.
Let me ask you, though, to what you just said, and I wrote it down because I wanted to come back to you. Not expecting significant upside for the stock. Why not?
Because I think that this is, it's a consumer stock. It has meaningful China exposure. But I also, think that in terms of the market, I think we're going to be looking for other parts of the market to lead in the second half of the year if we're going to get a significant rally. I think some of these big cap tech names need to hold their own coming into the second half of the year, but I certainly don't think that they're going to be the leaders necessarily, at least the Apple, Microsoft, Amazon combo. Amazon is actually, based on the multiple compression we've had, probably where I see potentially stronger upside in the second half.
Yeah. Joe, let me go back to Steve Kovac, who has more for us. Steve?
Caught up with CEO Tim Cook on this Q2 report. Here's what he's telling me. Apple didn't see any impact from those China shutdowns we've been talking about for the last several weeks, since those shutdowns actually began just as their fiscal quarter was ending. So no negative impact there yet. We'll have to wait for the earnings call, Scott, at 5 to get more color on how those shutdowns will impact the current quarter we're in now. Meanwhile, iPad is a little bit of a sore spot. Cook saying iPad revenue was down nearly 2% due to supply constraints, though demand still remains high, he's telling me. Those are the same supply constraints that Cook warned about during last quarter's earnings. Meanwhile, Mac is still on a roll. Cook telling me 7 straight quarters in a row. A reminder, Mac business has been booming thanks to those new M1 chips and new Mac models that launched just a few weeks ago. And there's still a slowdown in services growth that I mentioned earlier. I also chatted with CFO Luca Maestri, and he told me that's largely due to high growth during COVID, the same software story we've been seeing from so many companies, telling me, quote, digital content went through the roof, and that made for tough comps to what we saw last year, Scott.
All right, Steve Kovac with some color right from the man himself, the CEO of Apple, Tim Cook. Your reaction to that? Look, everybody pulled forward something during the pandemic, almost regardless of the kind of business that you were in, unless you were a travel-related thing where you lost almost all of it. But what's your take here?
Yeah, well, first off, with Steve, if Cook was going to have cautionary comment on the conference call, you would have already started to see it. I actually see that as bullish going into the call in terms of what they're seeing in China. iPad, Mac pull forward. That's the New York City cab driver knows that. That's why it just comes down to it's that iPhone number. It's China not slowing like everyone expected. And you start to put that together. Now you're starting to see a renaissance of growth at Apple, despite all the headwinds that we're seeing, into a massive cycle in terms of iPhone 14.
I'll just pick at one thing you just said. The jury's still out on what's happening in China. You heard that this seemed to be more of a timing issue than anything else related to China. Next quarter, when we get a little more color because of the fiscal year ending just as the lockdown started, you may have more of an impact than you do today. I think it's a little early to declare the coast is clear.
No doubt, but I can tell you, investors that I talked to were expecting train wreck situation in terms of clearing the deck. Cook, massively cautious. What they're seeing in China. China numbers significantly missing. All the Apple haters were out over the last few weeks saying the world's ending, fire into a crowded theater. Instead, you got a beat. You got positive on the conference call. There'll be some caution, but relative to tech, a Goldilocks quarter.
Joe, the stock is up $3.50. Is there any message in that? Is it simply that it really had a great day today and it has gotten off the mat? Remember, 157, the stock was there not that long ago, and here it finds itself $10 higher than that.
Well, first of all, we all hope that Tim Cook maintains a positive tone, in particular in regard to the consumer on the conference call. So I hope Dan's right about that, because we don't get that. The stock is clearly going to reverse. I think on the impact for the market, given the relief rally overall that we had today, I think investors should be very thankful that there was not a miss here from Apple, because I think that's where the risk really resided itself, on the downside, on a potential risk. Specific to Apple itself, you know that when the capital allocation is strong, it's something that I am an advocate for, and I want to own that stock. And raising the dividend, I like that. Increasing the share buyback program by $90 billion, that's just fantastic for a capital allocation strategy. And that's the type of company in this environment you want to own. But overall, let's be thankful we didn't get a miss here, because I think a lot of the upside capture was already unfolding in the relief rally from today.
Yeah, Alex, and forgive me for having to interrupt you to go to those numbers, but I'd like to come back to you, let you finish your thought now that you've heard the conversation, and your takeaway is now what?
Well, look, I mean, I can't help but be impressed with what Apple turned in. This is an extremely impressive quarter, especially when you look at the counterparts in big tech. We had the Meta beat yesterday, but everybody else seems to be struggling. However, I'll stick with my point, which I made earlier, which is that Apple is still living in the world that we're living in today. One where we're having higher inflation, right? So you're going to have folks that are going to make decisions. What am I going to sacrifice? Can I hang on to my iPhone 10 or 11 longer and not upgrade to 13? Can I hang on to my old MacBook longer? And then, of course, the China situation is unsettled. So, look, got to give it up to them. Bravo this quarter. I think over the course of the year, we'll see, because it's no sure thing that they're going to continue this run of success.
You know, Shan, I hear you on some of your concerns about where these mega caps are going to go from here. But, you know, if you look at this week, and I'm just writing them as we go, Microsoft, I'll put a check by that, right? They answered the bell. Facebook, Meta, they answered the bell. Alphabet was a bit of a disappointment, but the stock, though, had a nice rebound. And now you get Apple with a check mark against it as well. And we'll give it to Amazon. You know, they have some issues, obviously. But how do you then assess the mega caps starting tomorrow, given what we learned tonight?
Yeah, I mean, they certainly have held their own. And Scott, the caveat here is that if we follow up this quarter's first quarter GDP print with some more weakness in the economy and we continue to see it slow, big cap tech is absolutely going to come back into vogue. There's no better defensive. Dan said it at the top of the show. Enterprise spend is not slowing down, and we're going to see that from a corporate capital allocation perspective. And so if we continue to see some concerns, some clouds on the horizon for the U.S. economy, particularly on the consumer side, you're going to see that rotation back and away from some of these cyclicals. And that could be where you get that relative performance. But again, then you're going to see some slowing in other sectors too. So it's not going to be, you know, if these are the leaders in the back half of the year, there's probably some more economic concerns than what we're factoring in today.
Just depends, as Dan, I've said, the kind of business you're in when it comes to a big technology company, enterprise and software, versus a consumer-centric and consumer-heavy business. You guys are the best. Thank you so much. Dan Ives, my thanks to you. Alex, of course, we'll see you again soon. That's Alex Kantrowitz, Shannon, and Joe. My thanks to you, as always. Up next, we do have more on the big reports out of Apple and Amazon. A shareholder is standing by with their instant reaction to those quarters. Plus, the conference call is kicking off at the top of the hour. Fast Money has full team coverage of that action, which means you don't want to go anywhere. Overtime is back right after this break.